Good evening, everyone. I think we had an excellent starter for this talk, and I think it is all Babak's clever planning, perfect, precedents in terms of robotics, economics, and a lot of technologies coming together. So what I'm going to do is take it a step ahead and think about how all these technologies, and when they do come together, how it's making us rethink things. My name is Navroop Sahdev. I work for an asset management company here in Boston. We are building a currently stealth blockchain-based trading platform for crowdfunded equity. Those of you who know the space, it's a Reg CF offering and eventually open up to Reg D and Reg A. So that's my day job. Apart from that, I'm a research associate at University College London. They have a Center for Blockchain Technologies. So we do a lot of cutting edge thinking there, interdisciplinary and unbiased sort of research as to how these technologies are making us rethink socioeconomic structures and what all it changes for us, right? Also, the Center called Koala, which is a coalition of automated legal applications for the lawyers in the room. It's a spin-off of the Harvard Law School Berkman Klein Center for Internet Society, and that's another venue I'm engaged in. And we talk about a lot of legal protocols and what it means, the way it's redefining a lot of things we do. So what I want to do today is basically leave you with 3 key ideas, as I call them, at the intersection of economics and blockchain. And the first one is that of technological convergence. And it comes from complexity economics. I actually did some work on the same for my master's thesis at the Kennedy School. And what I'm really talking about is the fact that it's not just blockchain, but also AR, VR, robotics, and a host of different technologies, right? Or quantum computing, big data, when they come together and the whole is more than some of its parts, is when we are expecting a revolution and a different kind of world in the future. And convergence is, of course, the emergent property of the system, right? And I want to take a step back and talk a little bit about what complex systems are characterized by. Mostly, for example, there is no central controller in the system. And like I said, the whole is more than the sum of its parts, and emergence in particular is observed at the system level and not at the individual level. So a classic example would be the financial crisis, right? So if there's a run on the market, it makes sense for you to pull out your money before it's worth nothing, right? But if everyone does that, then the system can crash. So that's a very classic example of complexity observed in financial systems. Of course, it can be observed in natural systems, in biological systems. There's a school of fishes you see moving in patterns. And the curious and the beautiful part of emergence is that it's unexpected, and it can also be extreme, right? So what I really want to do is lay the ground for us to understand that what we see in the future may look very different from what we're witnessing now. So the question becomes, is blockchain driving technological convergence? Right? Can it be that foundational technology that can actually support a lot of technologies coming together and opening up a whole new world for us? And I want to be agnostic about it and say neither yes or no. I'm a researcher, but there are people who think that it actually does. And there are people out there, and I think they did an excellent job in putting together this taxonomy as to where these different technologies, lay in terms of their relative simplicity to complexity, right? And complex is not the same as complicated. I just want to say that. Complex system is something that has rules, but a complicated is something that does not have any rules. It's the opposite of simple. And so starting from, as you kind of saw an example of all of these in the previous presentation, so thank you, it was perfect. From data collection to drones to, autonomous vehicles and 3D printing to data management systems and automation and eventually governance, right? Which is key, a role that is traditionally played by governments, by central controllers, and the DAO is constantly mentioned, and I will go a little deeper into it afterwards, but what it essentially entails is what I call networks thinking, right? Essentially shifting the way I would say traditional economics is done, because that's not how past 200 years of literature that's out there. So that is to say that 1 + 1 is not 2. It can be more than 2 because there's an interaction effect between these two as well, right? And traditional economic science does not account for that. And what that means is that the properties, the links between the nodes are not the property of any one node. I'll say that again because it's so important that the links between the nodes are not the property of any one node, and hence the system is more than the sum of its parts. And so you might ask the question, where are these economic structures which are better suited for a connected world? And that's really the key question we are asking. And I mean, I don't have an answer for that, but that's something I want to put out there. The second key idea that I want to talk about is the impact of increasing connectedness on economic structures. So really, when you think about distributed ledger technologies, what it's really promising is a bunch of things, right? So what I'm going to do here is I'm going to break it down for you, what it means from an economics perspective. First of all, it reduces frictions in the system, right? This may mean information asymmetry is a classic topic. So Joseph Stiglitz, a celebrated economist, talked about what he termed as the impossibility of efficient market hypothesis. What he said is that if there was no return to collecting information and using that to, for example, trade in the public markets, there would be no one to do that. So what that really means is a lot of trading that we saw, or we do see, is actually done on information. It's not just because somebody has needs concerning liquidity, right? Second thing is it reduces transaction and search costs. Now, any economic model has to explicitly account for these because they can be exponentially higher than some of the other costs in the model. So much so that the market may not be there because the search costs and the transaction costs are so high. And a lot of these things can be automated via smart contracts, right? And I actually want to give a little warning here. I was talking to my colleague, David Husby. He's a security member at Hyperledger, and he gave a presentation on how smart contracts can be a critical point of failure. The DAO hack, right? The bugs are within the smart contract. And so you need to be extremely careful, and the question is, do we actually have the systems in place to handle a Turing-complete language, right? And we actually did some work on the DAO hack at the Consensus Hackathon earlier this year in New York City, and we were the runner-up. So what we really proposed was live monitoring of smart contracts. So what that means is they can be circuit breakers, just like in public markets, for example, that if something goes haywire, stop, notify a human or only resume it once it has been checked. So these kind of, and then I mean the purists would argue that it's not a smart contract, right? So there's a chicken and egg problem, and so the question of governance is a very intricate one. There's governance that happens within the system, and there's governance that is imposed on the structure from the outside. Something like from the government, for example, they might want to talk about smart contracts. Of course, most of my colleagues would argue that most of these are neither smart nor contracts, but right, they're legal and technical questions involved. With regard to information asymmetries, I've actually done some work on it. You can actually find it. What I call crowdfunding meets blockchain, and actually put it on academia.edu, and next thing you know, all the crowdfunding websites have published it. So what I'm really looking at is, if blockchain technologies reduces these frictions and addresses these information asymmetries, what happens to the liquidity of the market? Would the market be as liquid? Do we need it to be that liquid? How liquid is enough liquid? Right? So, and tokenization is one way, for example, to increase liquidity. But then there are other problems associated. I'll go into that later as we talk about ICOs and the token economy. The second thing I think blockchain facilitates is consolidating fragmented systems. So I want to point this out at the very outset, that consolidation is not synonymous with centralization. Again, our public markets would be an excellent example. Or think of, for example, if you go to a bank account, to a bank to open an account, right? There's an ID, a physical ID that you have to show, which is provided by the government. It's a separate system. The bank would do its KYC and everything involved. That's a separate system. And then what you do with the account, suppose you want to use that money for investment and trading. That's a separate process. So what you don't see is the monstrous architecture system that's behind it. And it's actually a cost of trillions of dollars to the economy, to the world economy, and hence the promise of blockchain, right? To help these processes. So when we say blockchain technology can consolidate these systems, what we're really saying is that now these systems are talking to each other, not through superimposing links, but they do so by default, right, from Genesis. And speaking as a practitioner at the same time, as someone who works in the industry, I think this really brings us to the topic of standards. So right now we are in the really early stages. There are no industry standards out there. And that said, the International Standard Organization has a Stucking Committee 307, which is currently working on it. So there are 6 subheads, and they're currently looking into coming, together and figure out the standards for the industry. But that is important. That is key. And overall, what it really does is it reduces systemic risk. What an instant settlement of transactions can do is reduce settlement risk, and because the transactions are pre-verified in many instances, particularly in case a smart contract is involved, you also reduce counterparty risk because the other party has the funds and only then can actually make the transaction. So overall, what it does is it reduces systemic risk, which is really the concentration of risk in a particular segment of the system, which is what happened, right, in the 2008 recession. So from the point of view of an economist or, a practitioner of economic science, you can ask the question, really, what's a revolution? What's all the talk about? And I think it's really about how it's making us rethink value. the first thing that I want to talk about is the commodification of trust through blockchain technologies, because it's programmatically embedded into the system. And, the mechanism for that is economic incentives, right? So that's why the Bitcoin blockchain works. And sort of leads me to my favorite topic, which is on cryptoeconomics. And this is the quote from Vitalik Buterin, who is the co-founder of Ethereum. He's done some good work on furthering the research, at least on the subject, and something I'm looking at myself. How cryptoeconomics is about having systems where there are desirable properties which can be checked into the past using cryptography, but can embed properties that can hold on into the future, right? So the incentives that are part of the system ensure that these properties hold on to the future. And I have proposed another definition in the Hyperledger blockchain for business course. I had the opportunity to write the business chapters for the MOOC, and so you guys are welcome to have a look. And for those of you who are exploring enterprise solutions using distributed ledger technologies, I think that would be an excellent resource to look into. And so what I want to talk about next is the tokenization of the economy. Again, you briefly heard about it, and I'm sure you're all aware of the token craze and Chinese grandmothers. But okay, I want to start by pointing out this. If you just Google token, really what a token is, it's a representation of something else. It's not a currency, right? You can argue whether or not it's a security, and everyone's trying to make sure that it's not a security, but the question of value is really what defines what that token represents, in my view. And I want to take a step further. I'm sure you've heard about distributed ledger technologies enabling transfer of value. What the tokenization of assets, for example, does is make us rethink value. Because if tokens are being created out of thin air, right, and it's not pegged to any assets underneath, like with traditional securities, for example, or market capitalization. Actually, the market capitalization of cryptocurrencies is not a concept. That's not calculated the same way as market cap of other companies in the public market is. So the market cap of Bitcoin exceeding Goldman Sachs, and I'm like, no, that's not what it is. Separate things. And that's the exciting stuff I'm doing on what I call the tokenization of the economy, and the implications for cryptoeconomics with UCL. And the thesis is that we're really thinking about how this tokenization phenomena is leading us to think of new business models that it enables, but also a lot of traditional, econ topics, like what about the risk preference of investors, right? I would argue that the risk preferences of folks who are investing in tokens is very different from traditional assets, and we don't have a way to measure it. We just need some data there, right? Or maybe we can reverse engineer it if you can get some data from token exchanges, which will soon be regulated. But this and a bunch of other topics with regard to what it really means, for economic structures, and that's sort of the thing we're looking at. So in conclusion, I think for anyone who is engaged in economic science, I would say the subject of economics is up for disruption with blockchain technology, and really that's the revolution that we're talking about. Thank you. Yes, please. Well, I think you saw an example just in the previous talk, right? And how it can, I would say, build new economies that probably don't even include humans. And IOTA is actually a very good example. There are definitely excellent use cases out there which can, help us rethink many ways. For example, the machines are trading things amongst themselves. If your fridge is empty, it can order food and trade those tokens with God knows what in the open markets, right? And other than this, I mean, you can think of tokens as reward points, right? A lot of these token sales really are what are app coins, and what they really promise is products and services. So in the current world, the equivalent of that is the kind of credit points you get from credit cards and shopping somewhere. So, and there are billions of dollars in all these unsecured databases that are there, but I think, like going back to the previous topic about consolidating these systems, I think there's a lot more potential in terms of what it can enable. We haven't done a very, actually that's what we want to do. We don't have like a systematic taxonomy of the business models that can be out there. I only have pointers for you right now. It's pretty early. That's an excellent question, I should say. I come from India, so the question is the impact of blockchain technology and what it can enable in developing countries being a lot more profound than what it can do in the developed world, and how that is linked to the way we are rethinking a lot of the economics that we've been doing. I think what I've said so far applies equally to the developing world, and I'm completely with you there. Let me assure you this, that the real revolution can be in the developing world. I don't know if we're there yet, but the most impact that we can get is there. A lot of people just don't care about, people sitting in 50th floor offices talking finance and probably using this as yet another technology to create comparative advantage, right? And continue to create it. And it's part of the work that I do is to figure out ways how to make sure that that does not happen, that the technology really does reach the bottom of the pyramid. And so this talk in particular concerns the discipline of economics. It's a wake-up call that the way we've been doing economics is probably not working anymore, right? There is no ambiguity about what you said, that the real revolution is in the developing world. Yeah, I think that's a very concerned question, and that makes a lot of sense. I want to link it back to the previous question. So the question is whether the speculative aspects of a lot of cryptocurrencies are a hindrance to the use cases and the potential we see, particularly for the developing world. A lot of ICOs don't have a business model. The only business model is hoping and praying that in the future, because the tokens are limited, right, the price goes up and we make money, and then we sell it, and then that's how we build our business. So when people ask me about the business models, and I'm like, yeah, we're looking at it. We're trying really hard to find the needle in the haystack, what the business models are. There are some useful ones, but it's pretty tough right now. In response to your question, I want to say that two things. One thing is the cryptocurrencies, right, which are not stable. People are still arguing, are they currencies? Is it money? Is it commodity? derivatives can be now traded at CME and in, elsewhere as well. But I think I'm essentially talking about the underlying technology, and the most important component for me in there is the peer-to-peer network. That's really what changes everything, right? So it definitely opened up the talk to not just blockchain technologies, but distributed ledger technologies in general. And that changes, like I said, a lot of the way we do economics. And the technology that's underlying, think for example, I'll just give a couple of examples to make my point. Identity. Millions of people in the world right now are stateless, right? And the United Nations and Microsoft and Accenture, I know they're with ID 2020, they're doing like a use case to, help refugees or refugees who are coming in, different parts of the world. So you might be a doctor in Syria, and you are homeless and nothing and no one when you come to Germany. So I have friends who are working in the provenance use case that, your documents, what was there in Syria also holds in the rest of the world. So those are the kind of use cases that is a real promise of the technology for me. Like personally, I do not care about cryptocurrencies and I'm not invested in it. Know too much. Right, so I'm not sure I understand the question fully, but I think the question is that the SEC has already put out, one of their conclusions after the DAO hack, saying that the DAO was actually securities, and a lot of the token sales would first be vetted whether or not they're securities, and we take it from there. Which makes sense. The Singapore Monetary Authority did that earlier this week. They actually put out guidelines for token sales, which I think is really cool, right? Someone's doing something. But, that actually makes life easy. If they're tokens, then, if they're securities, then the security laws applies. It's pretty straight, right? The question is when they're not securities, that's when things get interesting, right? Then what are they? Then what are the business models? Then what intersections are we looking at? What industries are being crisscrossed? And what is being facilitated? And how many layers of complexity sort of come up? But I think like with the SEC saying the obvious, then that just sort of removes some unnecessary complexity from the system, and that's a good thing. I think it's called Brilliant Media Campaign. That's, okay, I think no one got the joke in the group. Okay. So Bitcoin originally, which is the original blockchain, right? There has been way too much bad media around this. And yes, there was a time that, a lot of the criminals were using this currency. They still are, but I think what was lacking was the regulators did not know how to handle it. Once they do, and now they do, it's actually easier to track Bitcoin to the very first block, for example. But, if it's cash in USD, good luck with that, right? So, it's really people who don't understand the technology, I would say, are still, and this is not something for the general public, I think it's the media that did it. Whenever something happened, they made a huge news saying Bitcoin's dead, right? And that's sort of where this perspective is coming from. And once I think Ethereum was out there in 2014 or 15, it really sort of started a revolution, and you saw over $1 billion pouring into the financial service industry. And I usually, since I work in the industry, my perspective is that a lot of the efficiencies that are to be gained are in the back office work. Currently in the United States, it takes 3 days to sell securities. The system called T3, and Overstock, is doing stuff with T0. What really that means is that the trade itself is a settlement. So that's a huge savings to the economy, right? So a lot of the work that is useful and would gain or help us gain economic efficiencies are in the back offices that we don't see. What we see is the media reports, unfortunately. But I have to disagree with your perspective. We'll talk afterwards. Once again, I'm not sure I understand the question correctly, but you are right in saying, so I think the question is how it's different from traditional databases and what really is the difference as to how things are already being done, right? If it's essentially a database, then we already have a lot of databases, and I don't know, the traditional databases are able to handle a lot more transactions and way faster. And then again, for enterprises, you said what kind of solutions are out there, and what's in there, basically. So I mean, I would say yes. Essentially, it is a database, and it's a sort of a simple way to look at it. But then again, the way traditional databases work is that the administrator can go in and can change everything or anything, right? And the blockchain, there are many of them, but let's just say one, it works like a log file. You cannot change what happened before, and that's really is profound. You cannot change history. No one has special access, right, or privileged access. Actually, so that sort of transitions well into your next question about private blockchains. Actually, there are use cases that do need privileged access. Like R3 Corda has a regulatory node that can actually go in and see that the markets are working efficiently in real time. So the way regulation works in this country, as you know, is that things happen, and once everything is broken and shattered, and then an investigation is launched and, exposed to figure out who did what and why and what could have been different. And think of all this being real time, then the implications are profound. And I think that's the promise, right? And again, there are dangers involved, like I don't know, the identity being linked to your biometrics, for example, your core identity. Someone who comes from India, I think you come from India too. So the Aadhaar system. Super dangerous, right? Your retina scan and your fingerprint sits in one central database and is linked to all government services, all social services for 1.3 billion people. Any hack, any breach of that data, I mean, I can't even think of the consequences, right? You could just only imagine. I mean, the data breaches are so immense these days. The cost runs in billions of dollars every year. And so much news is coming in that you stop looking because it becomes normal, right? You don't know the kind of trace you're leaving digitally. So, I mean, I've seen some interesting cases where you use personas or like avatars, which is a Hindi word, avatar, right? And what it really points out is the indicator. The bartender only needs to know if you're above 18. He or she does not need to know you're born in 1971. This is your name, this is the city, and be able to see your identity card. So it can simply send a query to the blockchain saying, are you above 18? That's all it needs to check. So again, I would encourage you to explore more, and I'm sure you'll be surprised and astounded once you get down on that journey. Oh boy, that's a tough question. Now you ask me to play God. I'm going to take a shot because it's fun, but please, this is off record. So the question is, what's the first app where we can actually see, blockchain being a game changer, if I may? I want to say you would not see it. Because if it's a database working in the back end, it's not focused on user interfaces. You would not see it.
What's the economic impact?
Well, the economic impact is, it's about how enterprises are doing things and how we are interacting, right? Right now, and this is something for those of you who go in a lot of blockchain conferences, I'm sure you've heard, we are in the early 90s of the internet, they say, for blockchain, right? Or some argue, oh no, in the 1970s, because the basic protocols and how the infrastructure works are being developed right now. So you're talking about apps on top of this, right? There are some use cases out there, and arguably, some of them work, the others don't, the others are just white papers, but they've raised millions of dollars. That's another story. Tokenization of the economy. But it's very hard to say at the moment what it can do for you. But I know that if you're a refugee from Syria and your, identity can be proven anywhere else in the world, you've made good use of the technology, right? Or your education certificate, so the birth certificate of your child is still valid while you're still living and breathing, and it's not just, you don't know who you are simply because, you don't have a stamp for a certain country. I think we can already change lives, and the opportunity is right here, it's in our face. I don't think we need to wait for, some uncertain time in the future. I mean, the economists will keep doing touring work. Any more questions? Or should we wind it up?
I think you're good.
All right, thank you.